Hey guys, All in Crypto here, and welcome back everybody for another YouTube video. This is going to be a Cardano ADA specific video, and there's going to be a bit of overlap with my daily cryptocurrency markets where we really talk about the macro markets. You know, we predominantly focus on Bitcoin as it's still that tide that rises and sinks all ships. And there's going to be some overlap. Even though this is going to be a Cardano specific video, I am going to talk about the macro situation. And this video is really going to be all about when am I buying Cardano? When am I looking to redeploy the capital that I took out in March back into this market? Or what am I looking for to buy Cardano again? And that's really what we're going to be getting into. But we are going to be definitely focusing on, or putting a bit of focus, I should say, on the macro situation and the overall trend that's in place for the cryptocurrency markets, which is, of course, a downtrend. It's a bear market. And broader markets. You know, we're also going to talk about interest rates a little bit and how this all ties into Cardano, because what the hell has Cardano got to do with interest rates? Well, the crypto space very much moves like a market, like a stock market, and has speculators involved in it and investors. So it's going to almost dance to the same beat that the stock market has, gold, all these other markets. And in the macro environment that we're in, it's very relevant to pay attention to this, because this is the reason markets sold off in the first place, and the reason that they've continued to stay in this downtrend. And until I see some sort of a lowering of interest rates, which is a real pivot, not a stopping or a slowing down, then we can safely say that liquidity may flow back into the asset classes, certainly the risk asset classes, and we can get bullish again. So this is why the whole way down, you know, we weren't the first out of this market. Let's start really, before we get into what I'm looking for, on where I'm at in terms of ADA and my holdings. We actually didn't really get out of the crypto space to around about 44K. So this was March this year. I was actually very late to the party. And actually Cardano was one of the, and I still hold some Cardano. Roughly my overall portfolio is around about 85 to 90% cash. With a little bit of crypto, just in case I'm wrong. But you can see, given my cash allocation, that we've been rather confident this market was going to come down from these sort of levels here. And we haven't bought any crypto the whole way down, despite the rallies that we've had, or the periods of consolidation and the FOMO. Me and I have a Patreon where I teach people about all this stuff. We also trade and do a variety of other things, certainly portfolio management, something we look at. Have very much stayed out of the market, despite everybody getting very bullish on these rallies. And there's been some terrific ones here, for example, or for Cardano. It's been weaker than most other cryptocurrencies in terms of the price. There's absolutely a long list of fundamental reasons to be bullish on Cardano. And I think that right now, crypto very much acts as a speculative asset. But there will come a time where fundamentals will take over. There's always going to be a speculative aspect with a market. But the fundamentals of the cryptocurrency space, due to its lack of adoption, and adoption is excelling and continues to grow day on day. But really ask yourself this question. Do we use blockchain yet in everyday life? It's only a small percent of the world's population that actually does. This is one reason I'm fundamentally bullish on the overall crypto space. So those fundamental reasons to be bullish aren't quite in effect yet, but they will catch up. It's why we're such big fans of Cardano, because we think they've done things right. This tortoise approach we've seen with Solana's recent catastrophes has very much been validated. But essentially, you know, we're not really looking to buy here because of things going on externally. I think crypto very much acts as an asset, and I think all assets right now are being dictated to via interest rates. And in my opinion, the macro situation gets worse. And that's going to lead, and in my opinion, cause Cardano to bleed a little bit more than it already has. And one reason people get very bullish on ADA is because it's 89% down today. So people say, okay, well, it's not really got that much more to go, right? Wrong. I mean, if we take this is a very ugly looking chart of the non-logarithmic chart. But if we take the log chart, you know, you can see that, okay, so we're at 31 cents at the moment. For it to half and go to 15, you know, this is 50%. This is a big haircut on your capital. Do I think that Cardano is going to be a higher price than this in the next 5 years? Absolutely. I don't even think it's going to take anywhere near 5 years. So is there this kind of element of DCAing? Yes. And I will be doing some form of DCAing when I think the time's appropriate, but just not here and not just yet. So we've spoken about our sort of opinion that over the short term we might get a rally. Short term is maybe 1, 2, 3 weeks, and that's for the crypto markets generally. Doesn't have to happen, but we are very much focused and fixed on the fact that there is a lot, or in some cases significantly more downside to be had for the cryptocurrency market as a whole. Again, I want to stress this and continue to stress this. Does not mean that I'm bearish on ADA fundamentally at all. I think Cardano is potentially going to change the world. Blockchain certainly is, and I think Cardano is going to be a part of that. And we've had all this amazing news, but it just hasn't moved the price. And this is going to answer that question. This video will, without even knowing it, probably answer that question for many of you. So we're going to look at levels that we're going to look to potentially buy Cardano. I just want to look at Bitcoin. So this is very much a downtrend. And why is this downtrend being caused? This may lose some of you, but I'm going to wrap it all up in the most simplistic terms as possible and summarize the macro situation because it's a lot to unpack. But this is your, and I'll remove the draws. I was obviously doing something on this earlier. This is your 30-day Fed funds future. So this is the interest rate. And there's an inverse. So when the interest rate is going up on the Fed funds futures, remember this is a derivative of it, it's going down. And right now you can see there is a pricing for interest rates at around about 4.14%. Okay. So why have markets sold off and why did this take place? Well, it's the same reason that they rallied. And even actually there's a correlation here going back to 2008's bear market. This is something to remember and take forward with you. It also explains why I'm not buying here, but why I will be looking to buy and under what premises. And there are a basket of factors that will go into that, but we'll keep it as short and sweet for now. So all markets typically sold off in the expectation that interest rates were going to rise. Why is this? Well, it's because if you think about money, and we're going to use the term liquidity, so whenever we bring up the term liquidity, it's money that we're talking about. That's all liquidity is. And you have this pool of money, and it's not growing, it's not getting inflated like what we saw from here onwards. All markets benefited as a result of it. Remember, low interest rates, markets do very well. Higher interest rates, they typically don't do as well. The reason behind this is because if you think about a pool of money and it's all allocated, and there's obviously a cash allocation in that as well, well, what you've had happen is you've had a debt market, which is part of it's an asset. It's the fundamental bedrock to currencies is debt, bonds, treasuries, so on and so forth. That has now been repriced at a higher interest rate. So it's not just my mortgage that potentially may or may not go up, or your car payment, or a company's loan or something like that. It's debt across the board goes up. So if there's this pool of money, this pool of liquidity, and it's all allocated into different assets, well, what you've had is you've had basically one asset have to increase the amount of liquidity that it takes out of a pool of liquidity. This has to come from other places. And this is why all markets, this being liquidity, sold off in preempt of the up and coming interest rates. November, we got the early signs, and then into January, February. I wish I'd paid a lot more attention to this back then. I'd have saved myself quite a bit of money and probably been out roughly on the bearish divergence that we had. But this is something I'm determined to get right, which is why I really want to share it. So liquidity is getting taken from markets. Jerome isn't coming along with a vacuum and vacuuming it. It's just going into a massive, colossal debt market that, in my opinion, where interest rates are now isn't sustainable. And this is there's a whole other risk element to why potentially I'm not investing right now. But we're going to focus on just the situation that markets are in broadly. Now, is this Bitcoin specific? So we've got Bitcoin and then we've got the 30-day futures. No, it's absolutely not. This is the S&P. We could bring up something uncorrelated like gold. Gold also sold off. We could potentially even bring up. We could really bring up anything. Let's take a look at oil. Oil had a delayed response in purple. However, so it wasn't like a risk on asset because it's a commodity. It's a different kind of asset. But it still has succumbed to interest rate hikes. And this is all because, again, this concept of liquidity is now being taken and having to go and service a far greater market. This environment is still at play. And it's still set to be at play, and you're going to continue to see liquidity getting drained just where it's at. They're actually set to continue to up interest rates. And anybody that thinks interest rates have no correlation with markets, this is actually interest rates going up. So interest rates went up here. So this is really where we started to get a bit. I've used the wrong thing there. Bear with me 1 second, guys, and then we will get to Cardano. But I want you guys to really understand this. This is something that I talk about every single day on my channel. We always talk about the macro. Can you see the correlation here between? So this is the interest rates. They're going up when it's going down in black, and then when they're going up, actually interest rates are coming down. Confusingly inversed. But you can see the bear market Bitcoin here, and you can see what took place and what actually led us out the other side of this. Now, they had to do this because they're essentially going to implode the repo markets back in 2018. But I'm going to argue that something similar is going to take place, okay? And this is a good way. It's not the be-all and end-all. I don't think Bitcoin's coming down this low either, guys. It was just a draw. This is not the be-all and end-all, but this is a damn good thing to look at in terms of when to get bullish. And I'm definitely arguing the case that I think actually there's more downside to be had for the cryptocurrency market. That's without any sort of major risk event. And, you know, that's broadly, not just for crypto, but for markets generally. And I don't think Cardano, despite all this amazing news that we're having, like an algorithmic stablecoin and all these other things, you know, we have a DeFi ecosystem. Yeah, we took a bit of a hit on our Dana, which was one of the altcoins that we were actually looking to buy. However, you know, this is an ecosystem that hasn't even got started yet, and the prospects of where it will be once it has not only got started but really sunk its teeth in, I think, are very, very exciting. So there's a hell of a lot of reasons to be fundamentally bullish on Cardano, but as far as the price is concerned, it's going to dance to the same tune as the cryptocurrency market broadly, and then the general sort of macro landscape. And just to really, before I get into Cardano, concrete this and get this idea simplified for everybody, when the government is, you know, printing money and you know, has very lapsy-daisy interest rates, so zero, it means people can essentially borrow money for free. They can stick it into assets that go up, and then more and more people do this, and the economy expands essentially as a result of this free-flowing money, liquidity. When you're in this environment, it's the adverse. So we are in an adverse environment to what we were in 2000 and from 2020 onwards. So this is at the M1, which is the money supply. Remember, liquidity. If you look at it go up, this is probably one of the most important Cardano videos that I actually think is on YouTube right now, because we're not just spouting out nonsense or regurgitating news. We're critically thinking about this market moving forwards and an asset that we really want to invest in, and what's going to be the signs that's going to allow us to invest in it. Now, we're going to be investing in many cryptos. Anybody who wants to find out, you can go and check my Patreon out. But Cardano, I think, is one that you guys will publicly know I'm definitely going to be buying. And the whole reason we sold wasn't because we're giving up on the project and we only got out around about the $1.10 mark. It's more because we wanted to increase our holdings, and we've more than tripled it where we are. And I do see lower prices taking place. So back onto this concept. So when money is free flowing, everything expands, right? When it's restricted, an unprecedented level that we've never seen, because we've never had this much debt with these interest rates before. It's colossal. You know, it restricts, and it restricts in the form of things going down in terms of price quite typically, and then there's knock-on effects with the economy, job slowdown, so on and so forth. We've also done a huge article on the unemployment rate and the stock market, which I won't go into. Anybody's interested in that, let me know in the comments. I'll fish the video out for you. But we ultimately think that things are going to get worse for markets generally, and Cardano is not going to escape that. And yes, there may be a rally like we spoke about, or we've been speaking about for the past week. We sort of had it today a little bit, and we certainly got it off the short squeeze. But I think ultimately this is going to continue to come down. And when you look at this chart, again, one reason people are bullish is because they look at this and they go, okay, well, it's nearly 90% down. It's only got another 10% to go. It doesn't work like that. You will always have... be able to go down 100% from wherever you are. Now, I don't think that's ever going to happen. I think Cardano is going to be here longer than me and you will be. I really do think this is something to that's going to be, blockchain is going to change the world. But you can still come down significantly. And really, areas that I'm looking for to accumulate, and remember, there has to be a sort of a macro backdrop that supports this. Well, one of the best entries that I can find is 18 cents. So we're taking nearly a 50% haircut, potentially. If it comes down to here. Now, I think you get quite a lot of buyers before you even get to this level. And I actually think that, potentially for me, I don't want to give anybody... I think you're definitely going to get a bounce when we get down to the sort of... what level is this? 27 cents. The reason is you have had it as support previously. And you've held it quite prominently. And this is a level that you're going to interact with. Why have we consolidated coming into this? Well, it's because you've got price support. And I think ultimately Cardano is going to continue to bleed. There's going to be more sell pressure than there is buy pressure in this environment. But eventually it will bottom. And I think it's very much going to just, and is repeating what Ethereum did here. This is basically the Wall Street cheat sheet. And this is the trajectory that I think Cardano is essentially on. Only for it to set up and then go and, eclipse this last rally. This is what I think is going to come for Cardano moving forwards into the future. Is it's essentially just repeating this. This is this kind of boom and bust cycles. This one's been massively amplified as we're kind of moving away from the 4-year cycle theory. Although we've kind of followed it quite well, and we're now moving into, we're at the table now with the other players like the stock market and so on and so forth. So I can see levels coming down. If I could get it for 18k, I would just buy at that regardless of the macro situation. That would be a secured bag for me. At 18 cents. But really, other areas that I may be interested in buying are potentially 27 cents. At that point, we've nearly 4x'd our original holdings, which is going to make me very happy. And then we're looking for levels, we're looking for maybe coming into here. And if you use this as a range, these two areas of consolidation, if you come in and you actually fall below this, look for that downside. Okay, so if you hold this, and this is the thing, don't all go in at once. So DCAing does work, but I think that if you've DCA'd the whole way down here, you're in a lot of pain at this point. Really, for me, I'm looking to do some sort of a hybrid DCA where I have a pot of money that I will allocate almost, not at once, but in stages. So if I think that the bottom might be near, or it could potentially be in, or we see some sort of change, maybe I deploy some capital and then keep a little bit of dry powder and rinse and repeat on the way down and or potentially the way up. So this is really what I'm looking for. I think Cardano, in my opinion, is going to come lower. This is something we've been saying from $1. It doesn't seem like an amazing call, but we've been trying to keep people as safe as possible here. And it's come down significantly. If we were at $1, and it's sort of round about $1, guys, today is still 69% down. So we saved a lot of capital doing that. I think potentially you're looking at maybe coming down to at least 27 cents, and then there is definitely the room for going lower. And this is despite all the bullish news that's taking place. This is just my honest opinion. Again, just to bring back the macro situation. The Fed's bullish. We need to keep rates at a significant restrictive level for a longer period of time to ensure that inflation returns to our target. Their target inflation is 2%. It's currently at 7%. Yeah, it's coming down, but slightly. And there's a whole basket of things that could flare up. And I think we could potentially be moving into some sort of a stagflationary environment. So that's really all I've got for you guys. I don't have any specific necessarily price targets, just areas that I would look for. And I actually think people are thinking that this bear market is going to be, I've seen so many tweets, just come back in 2024, guys. No. What happens if something happens that causes them to have to do a similar thing to March 2020 and turn the printer back on and stimulate the economy because they need to? That's actually quite a high likelihood scenario that I have in my head, is that potentially that could happen. They could break something and have to print. Or... there's a whole basket of, the economy could completely go to kaput and they could basically have to bring rates down at a record rate, like we saw back in 2017, 2018 when they started upping rates. They nearly broke the repo market. And then, of course, they flooded the system with liquidity, which the repo market needed. So that's no longer necessarily an issue now, but others are. So I'm rambling on now, guys. Just my thoughts. Hopefully you guys have found this useful, entertaining, and informative. If you have, a like is always appreciated, so as a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.